we're back. Let's see. Let's hope this is working. We'll see if this one works. We had to switch internet Wi-Fi's and see if we can get some better coverage here. So let's hope this is working. If not, then apologize. I'll close it off for the day, and we'll have to just come back another time. It says we're live, so hopefully you guys can see that. I'm off. Does it say we're live again? Oh, it says we're live streaming. I'll have to check and see if this is there we go. We're live. Howdy, hello. Yes, you can see me. Are we? How's the? Let me see how the stream's doing. Are we a little better than we were before? Actually, we are. Oh yeah, we're in there now, Hadi. I think we're only about there's only about a 18-second delay here. I think we're doing way better now. It was like
through my other router, and I think it's giving me some issues just lately.
yeah, it was like 2 minutes behind. I was like, oh, that was a great call. Oh, you guys haven't seen that yet. Okay, see you. Okay, well, good. We're back in action again now. That was some. I had a good play there off this short, this immediate rebalance you see right here. I got the play off of that for a short down into this discount box here. So that was the play for there, and now I'm out. I'm waiting for a market structure shift. I don't know if Hadi, are you into the same thing? You do something with your hair. You look great. Thanks. Thank you very much. I want to try that new shampoo they got for balding men. Mine's supposed to be just thinning, but I'm 60 and I'm barely holding off the gray hairs, so I don't do any dyeing or anything like that. So I'm wondering if that shampoo they got that for baldness, or it's just another one of them snake oil salesmen. If anybody's tried it, let me know. Comment, let me know in the comments whether or not you've tried that new shampoo they got out there for balding men. See if it's any good. Then I'll contact them and say, hey, look, send me a bottle of shampoo. I'll try it out. And if it works really good, I'll let my subscribers know. Is there one that actually works? Yeah, I don't know about that. They say that. I'm not gonna say their brand name because I'm not gonna promote them if they don't if they don't actually work. I don't want to promote people that are just selling a scam. But apparently, it's made with all the natural products. You'll see it on your reels quite often if you look at it. If you look at reels enough, it'll pop up in there. And if you say to your phone, shampoo, balding shampoo or something, I'm sure it'll go, ooh, the algorithm says send in balding shampoo commercials. So I'm just looking for, see how that right off that level we were looking at there, that 4 hour level, look how quickly we came off that level. So remember, we're looking for those key levels on the way up, and then we're looking for a reversal at that level. And that was the reversal we're looking for right there on that immediate rebalance. Traded below it, came back inside it. That's what we're looking for continuation. So when I'm telling you about those those key things you look for um, price levels. You look for a reversal right at those higher time frame objectives that you're looking for. That's it. And look at these wicks. Look at all the attempts to get back up there, and it's failing. So do we roll over and come back down lower now? What do we do? Is there one actually works? I took two shorts up there. Nice. So you can see all this discount array down in here. Look at that bounce right off of that here. Bodies respect it. Wicks are just bouncing off of it now. So if we get a pull back into this range, the question is how far back do we come? Are we just tapping this level here, rolling over and coming back down now? I'd love to see that go short there. Let's start coming lower. Bus is coming. Oh yeah, I got me some. I got me some of that. Oh, come get you some. Oh yes, come get it. I'll take it. I'll take it. Right there. I'm out. Right off that inversion, fair value gap again. Run for the low. I'm out. Take that small little right there. 293 to 330 or 233. So that's like 60 handles right there in 2 minutes. Move to the sidelines. Wait for the next setup. And here's our bottom of the hour. Crazy Ivan. The bus is coming, says Hadi. Better be a double-decker bus, Hadi. We're looking for some people to jump on here. How far are we behind here? You got coming up to 8:30. Oh, you're not too far behind. We're only a few seconds behind there. Let's take a lot of people with us, Hadi. Let's get on this bus, man. Let's load it up. Let's load it up. This is all it takes, though, is just to do a little run down into this discount box. We just drop below this level. And now we're looking for, if we can get back above, say we're above that 830 again, and if we get above this first presentation again on a close, look for this level right here at 305. If we close above 305, come back and tap the initial presentation fair value gap, look for a run to 50% or more of this range. And then just take your fib tool, pull it from low to high inside this little range right here. And your first objective, unfortunately, your first objective is like right there at 50%. So let's just kind of watch to see how this unfolds. 50% is the beginning of the fair value gap, so I'll get this out of the way so it doesn't cloud us up too much. All right, so we're looking for this level here to see if it provides support, and this little high to get taken. If we're coming back into this range, I want to see this level get taken and that candle right there to close above it, come back, find support at it, and then start pushing through. And then 50% sitting right here. There we go. We're running above it. Now I want to see us close above that without taking the 50% just yet. If it hits 50, then you got to decide, do I want to, I'm going to wait for it to get back down to a discount before I run for hopefully a little more than 50%. Because if this is the next price leg down, you've hit the premium level at 50 institutional order flow entry drill. You also can go lower from there. So you can get frustrated by thinking, oh, it's coming up higher into the range, but it's already hit the 50. It's already giving you the opportunity to see right there. See how we have not closed above this level yet, and we have not closed above this high here. We've just wicked up there, but we have closed above the first presentation. We're tapping it. Now I want to see that start marching higher. Get our 50% next. Watch it tap the 50. I'm not in this, by the way. Are you in this at all, Huddy? I don't think you are. I don't think this is your typical setup. Nope, I didn't think so. Waiting for the macro. Smart man. Smart man. But this is, I want you to kind of study this as an interest piece off this initial presentation, right at this level. See how these got all these overlaps that might entice you to take this long? This could be a bull trap. We want to see a body get above there. So again, watch, think about your rules, write your rules out for what you consider a bull trap and a bear trap, and decide for yourself what the is there flexibility in those rules? And right now, you could be playing flexibility. You could be looking for ways to convince yourself that that's the run higher. As soon as we hit that 50% right there, and you're just shy of it right now, still know the rule is we still have not got a trade above, a body above here, and we have not got a body above the reversal. We have got a low taken, so we're looking for this to get taken on the upside if you want to go higher. And that first presentation, people might be keying off of that to go higher. We're just shy of that 50% range. So again, what's your rules? Are you convincing yourself that this is a good opportunity to go long here? And if it goes, great. Have you now validated your way, a reason to break your rules? Okay, so looking for that first 50. And we said it was sitting right there on that fair value gap city low. Should touch it in this candle. There we go. So there's the 50 touched right off that. So if you were paying yourself, you'd pay yourself a portion there and you'd move your stop loss right to break even right now. If that's one of the things you're going to play with off of there. So now we've got a body traded above this level right here. So now this becomes valid. That first presentation becomes valid. And now you have to ask yourself, this is the candle. How is this candle going to act? You want to see it go snap. You want to see that snap off of there now and start driving higher like that. Go, go, go. Get some speed here. That's your perfect entry. Following the rule, now you come back, tap yourself. And as soon as you take that high, move yourself to break even. That's why you hear Hadi and I get into those uh, risk-free moves real quick. As soon as it takes that high, move to break even because you don't want to come back and tap it again. You say, look, you've done your thing here. Now get out of here. So if you're sitting here right now just above break even or at break even, cost of your trades, it's not costing you zero stress. If you paid yourself there, you got a little portion off there, let the rest run now because you're above 50%. So this could be just a simple rollover and come back down in the next price that goes lower and you're on the wrong side of it. but you've at least paid yourself. So look for the 62%. You move your stop loss there. You'd be using model 1 to work your way back inside this range and see how that snap off. That's the kind of price action you want to see at a perfect entry point. And that's the following. That thing followed the rule. This did not follow the rule, but it's still panning out. Again, that's up to you to decide if that's an important level to key off of. But that rule right there, enter long, move as soon as it takes the high, move to break even, risk free, pay yourself 62%. Now, if we're back into paying ourselves here, this is precision, you guys, for looking at price acting the way you want it to act. There's the 50% right there. It came back, give it a beautiful tap. Now there's 62%. So you now move to 50. You pay yourself at 62 and you would move it to 50. So you're guaranteed money. You've paid yourself 2 times on the way up. It's a stress-free trade. Now you may not like to, you may not go, "Ah, that's not my kind of trading. I'm not going to dig for 20 handles. 20 handles may be nothing for you. We have not tapped the 50 yet. So if it hits the 70, you move to 62 and you make even more profits and you pay yourself again. If you've got one micro right there, now you'd be sitting at 62%. From a perfect entry, we gave it to you right as it's starting out. We gave you the exact setup, the rules to find that perfect entry right off that level. And now you're at 70%. You've paid yourself multiple times on the way up and you still have the rest of your trade in here. Does this make sense? 75, you're now moving to 70, and it still hasn't tagged you out yet. 78, now you're moving to 75. You're out right there. It just came back and tapped you out. So you paid yourself all the way up to 78%, and you got taken out at 75 from a perfect entry to an exit right here at, what is that, 55 or 355. And we got in at the perfect level down here, which was 296. So you got almost 60 handles of that run right there. And if that reverses and comes back on you and you're on the wrong side of this and it starts taking out these lows, you paid yourself on the way up right there, following the rules. Following the rules. That's the rules that, anyway, that's the rules I've set for my entries. I hope you learned something there because that is super valuable in terms of risk versus reward. Market structure shift, come back down, find support off the order block and off the first presentation fair value gap, trade inside the range, internal range liquidity hunt, all the way up to 75%. Pay yourself. Pay yourself. Now I want to see it rip all the way back here and make my point and deny those who want to go above that level, who are gutting for the highs all the time and you don't get them and it reverses on you. That's how you pay yourself. Internal range. And if it runs higher, who cares? Just get back in sync with it. If it gets back above this level right here at 377, if it closes above that, the 6 a.m. candle comes back into the 6 a.m. candle, then look for midnight open and the higher range. 18 of you got a chance to witness that. Following the rule right to precision. Right to precision. Whew, I love it. It's been a very good day so far. Now, do you guys have a set of rules around where you make, well, that's my setup there. Do you have a set of rules that you're very rigid with when it comes to trading? Very rigid.
as Russell says, be very rigid with your rules and inflexible with the market. Flexible with the market, inflexible with your rules. That's how you're going to keep your money in your pocket. Look for this as the next potential price leg higher. We've got a little change in direction here. I want to see it get below that if we're going to come back into the range. If we're going to continue to extend higher, you want to see it get above 377 here. How far are we behind? Are we lagging again? Damn, we are again, hey? That's 45. So how many seconds? That's 0. There. Next one starts. So 40-second delay still. Sorry, guys. We changed the internet, the Wi-Fi, but it doesn't seems to be lagging on us again. I'll go for 15 more minutes. I want to see what this next macro is going to be like, and then I want to see a run on this liquidity here. This would be great to see a 10 o'clock or 11 o'clock run on liquidity here, and then run this lows here. I don't want to see these lows get taken yet till after 11. See 11, peak this out, catch a reversal, and then look for these lows to get taken. That'll be a sweet little run. What are you guys looking for your setup? What's your idea of same? Okay, good. Looking for a short. TGF 50. Yeah, it's just bouncing around. I agree with you, Kevin. Just sitting in here. We think about where you are in terms of this little range that we're in here right now. All you've got is this immediate rebalance right here, which is what we're sitting on right now on the bottom of it. See that? We're bouncing off the bottom of this imbalance. So this is called the premium, what I call the premium array, or the premium box, which is sitting right there. This lag is really making my, come on, up here, right there. See how we're bouncing off the bottom of this immediate rebalance right here? We're banging off the bottom of that right now. So if that's our premium and our discount box is down here, this is our discount box right here. That's where we're stuck in there right now. One of those two has to give way in order for us to go higher or lower. I was not on the ball today, all demo, thankfully. Yeah, I was having a hell of a time this morning. I was in some drawdown, but now I'm in green, so I'm going to protect what I've made I've made today and end the week on a positive note and not put any more money at risk. We could still get a TGIF Friday. Look, Hadi's looking for a TGIF Friday here, and let's look at a TGIF Friday. Why not? Let's just look at this here. So let's look at the days of the week and say where are we sitting for TGIF? Man, this freaking lag is driving me nuts here. So 1, 2, 3, 4. So we got Mondays right here, right? So if we have a TGIF Friday, let's just say this is the high of the day. I don't think it's going to be the high of the day, but let's say it is. If that's the high of the day and we're looking for a TGIF Friday, that says where should be withdrawing back into this level right here. So that puts us what level in here provides. So if we're back inside this imbalance again, I'm just trying to find out what would be a confluence that would support price there. So those are your three levels, 137, 047, and 90, 57. So 7 levels, 57, 47, 37. Okay, is that what you got for your levels, Hadi? As they sit right now, that is. I still like these equal lows here. So we have a consolidation. If this pops down below here, comes back up, there's a cam model 1 entry there. So I'm going to try a short there from a cam model, and I do not want to see a stop get taken. Now there's too many equal highs here, so the opportunity is to run right through us and take those highs out. That means just this will end up being a cam 3 model here. So I want to see this level here provide support, and we want to see if we can get back down to this discount box here again. And I'm just doing an internal range liquidity hunt here for this first level. Hey, beautiful. Yeah, I'm gonna be done in about 7 minutes, and I'm only doing a demo trade here, you guys. I'm not doing any live trade on this one, but I'm just doing a cam model 1 here. Yeah, I'm gonna be up in 7 minutes, love. And if this takes me out here, then that premium level is what I don't even want to see get through the 50% of this. If it closes at 50%, that's a cam 2. How many seconds have I got left in there? I'll close it out if I'm wrong. That's all 3 of them in 1 candle. Your ass is next. That's going through me. When you come back through 1, 2, 3 levels all in 1 candle, your ass is next. That's a good example of it came back through what I wanted. It looked pretty obvious. It's got lots of liquidity up there. It's not going to leave that untouched. I just thought this would be a nice little cam 1 model for a run down here, but wasn't going to give it to you. So we're looking for a run on this liquidity here, premium array, and if it bounces off the premium and then comes down, welcome to consolidation time. And that closed above 50%, so I would have been out of there anyway, even if that was a CAM 2 model I was going for, and your stop loss is sitting right here. As soon as you see it close above you like that, that's one of those move to the sidelines and wait. Wait to get back in sync with the market. Otherwise, you're just going to get beat up in a consolidation now. So for me, you'd have to wait above here to go higher, or wait for this low to get taken out, and you're looking for this little discount. Bissies here, and this guy over here. Don't forget this imbalance. This is a gap, like a liquidity void here. Yeah, that was a nice little demo ball failure right there. Keeping my money. I'm not spending any cash on this kind of getting too close to lunch hour for me. And see how we're in the premium portion of this range. So you see why I was looking for. I want to just catch a quick little run back into the discount portion of this off of here. So not not such a bad decision to run for that, but again, we may still end up getting it with the stop loss sitting right up in here. But again, my rule is if it breaks 50% of that, then or 3 arrays in one candle, your ass is next. And in this case, it would have came back up if my stop loss was sitting there. It would have got me anyway. So it's going to end up coming down to what I wanted. That's the risks you take. Hey, it'll end up going to the direction you wanted it to go. But again, it's not acting the way you want it to act. So if it gets there, it gets there. Was there was there minus R trade? N trades, good morning. 1906 on the hourly order block, 50% of the range is about 47. There's the discount box hit. That's what I was looking for, what I wanted, but that candle there was the one that threw me out. So there's the discount. Now we're looking for this to run through this discount box now and start extending and look for this discount area. The next one below you is right here. Trade was there. Trade. You mean here? I was looking for a cam model off of here. A cam model 1 for this discount box. And didn't get it. My rule got me out of the trade there. And believe me, the rule will save you more times than the miss. So now, if you want to see that premium box get hit, I want to see this level right here get traded through, find support, then I'd be looking for a run on those highs. So you've got discount, premium is lots of liquidity sitting up there. And for 11 o'clock to run these highs out, you've got a motivation to go higher right there. So you could say to yourself, this is the small range you're in. So if you trade above here and you come back to it, you're already paying a premium to try and hopefully run through this mean threshold and take these highs out. And if you don't get it, then you paid a premium to unload at a higher price, and it failed. So you'd have to wait for this to break this level, come back, find support here. So you're in a tight little range here right now. So a decision to trade this, even in a super sniper mode, you'd be in a guessing point, like unless you just traded straight off the discount and said, I'm going long right off of here. My stop loss is sitting down here. The moment I break that high of that fair value gap there, I move to break even and pay myself a portion there. Like right there, you pay yourself a portion, you move to break even, and now you wait and see if this level continues to hold. So if you're into discount arrays and you trade off the consequent encroachment of the discount array and say, I'm going to put my stop loss just below the wick or the low of that fair value gap, because you don't want to see it trade through it, even with a wick. So if you're really tight on your stop loss, that's like a turtle soup type thing. Not that it is, because there's no real dip below a low, but it's catching the lowest part of it, catching the return. Watch for a trade above this level right here on a close, 331. There it is. You're above it, above 331. Come back down and tap 331 right there. Bingo, got it. Now, so that's like one, two, three different entry levels. And now you don't want to see it close below here. Not even a wick below that. That's it. Stop right there. Go back up. Don't even want to see a tap below there. Right on the money. There's the open. No, all three levels coming through you. All in one candle. One, two, three. Don't trust that. Coming lower. If it goes higher, who gives a crap? That's not acting the way I want it to act. So if you were long on that off the discount box, you would have been taken out. You would have paid yourself there at the high, and then it would have came back and taken you out. Chop, chop, chop. Still haven't gone above or below these levels yet. Okay, I think that's going to be it for me, you guys. Hey man, I'm N from ICT Group. Oh, you are? Hey, good for you. I'm glad you popped in. Sorry, you're just catching me on the way out now. So you're welcome to join us in the Telegram channel. Sorry, I have a Telegram channel as well. I know there's tons of them. ICT's obviously the one you want to be in, but he doesn't post on there very often. But you're welcome to pop in here and have a chat with us. We got guys like Hadi here. He's amazing at trading, and we got some awesome, good traders in our group that share trades with you all the time. So we're happy to have you join there. I know you've got that's another group of people, so I respect if you don't. It's no big deal. But thank you for turning up, and I appreciate you popping in to see what we're looking at. So we're trying to give you like an absolute level of precision, so you can see our level of precision is just like amazing. It's it's like stunning levels, and we draw these out before they go there, and they're not drawn out after the fact. So watch this level right here at 332. Again, if we get above that 332, find support. You're looking for the next level is um, 347, and then you're looking for the highs here. Look at that. Look at how we froze right on. Look at the bodies just freeze right on that 332. Right on there. Now you want to wait for that to pop above that. Now, yes. Now you look for the 347. Tippy tappy. There's 347. Nice. Now let's get a close above that. No body. Look for a return back into this inversion. If we don't close above that, look for an inversion tap here in the next 6 seconds. We want to see that close above there. And I'll draw this out so we're not playing this after the fact. Watch this level. And sorry, this is so choppy. every time I try to put my mouse on there, it's lagging on me here. And I'm looking right there. Look at that. Above it, tap it, start marching higher. Delish. So now you want to see this premium box here get taken on the upside. Or at least traded to consequent encroachment, and then want to see how we work through here to find support to go higher. If we start whopping around in here, look for this candle's high at 340 to get tagged. Like if we do come back with another wick, look for 340 for a tap before going up there. There's 340, 337, 340. That candle's high. We're looking for that. Now you want to see it start snapping up and going higher now. Did that tap the box? Stand by. I might not even have that in the right spot. I want to make sure we're giving you guys the actual spot. This candle's close is 334. This candle's close is 331. That looks like that's, oh no, the low. I'm supposed to look for the low, not the close. The low is 33075. The close on this is 331. That's above taps, goes higher. Mean threshold taken on the upside. Come back to this candle's high right here. Beautiful. Now we want to see it continue going higher. Look for that. So far it's acting exactly as we want. Each candle hitting exactly the levels we're looking for. Thanks, NK N Trades. Appreciate it, man. Yeah, anyway, that's it for me. Look for this higher thing. And I agree, Hadi, I like this run above this high. If we take this out, look for reversal. And I like these lows. You guys don't deny yourself these lows for lunch hour. I think that's going to be your area of where we're going to be looking for this after the 11:30 or 11 o'clock run, 11:30-ish. Look for a pump back down. Take out these lows. I don't want to see these get taken before lunch. I want to see those get taken after lunch. I want to see this pump up here one more time into that level. Um, maybe even into right here. Where did that take us? Oh, yeah, that takes us right to there. That's a 6 a.m. candle. If we can get back into the consequent encroachment or just under the consequent encroachment of the 6 a.m. candle and roll over and go back down, I'll be all right with that as well, which brings us back into that high right, that open right there. Puts you 4 a.m. Catch a 4 a.m. tap. Watch for your reversal there, Hadi. If you can get a 4 a.m. tap, if you do run back higher into the midnight open range again, look for the midnight open. Look for the midnight open candle. Did I even mark it today? I thought I marked the midnight open candle. Stand by. Let me get myself back there. So there's a midnight open candle here. Doo, doo, doo. Sorry for all the lagging, you guys. Midnight open right here. We'll call that midnight open. Midnight open. Okay, let's get back to the 1 minute. So look for that midnight open if we do run above that high. If the 4 a.m. doesn't hold, just look for your first reversal. These key levels, 6 a.m., 4 a.m., midnight open, and that first fair value gap and the midnight open range. All those places, this just seems to be the big draw on liquidity before the run down lower. Even after lunch, this would be like the high of the week. If we can run back up into that level again and roll back over and then do your 62 or 20 to 30% of the range of the week for your um, TGIF Friday. Anyway, I'm out of here. Thanks a lot for tuning in, you guys. It's 9:10 Alberta time, so I'm going to go spend some time with some family. I'm only here for another couple of days, so I will see you guys bright and early on Monday. Uh, I hope you guys have a great weekend. Be safe out there. Take care of each other. If you like what we're doing, hit the thumbs up, like button. Appreciate it. Just lets me know you appreciate what we're doing. And hey, if you're new to our channel, you're welcome to join us anytime. We're here every day, live and in person, looking for ways to become profitable and study the price action throughout all the charts. So you guys have a safe weekend. I love you all. Thank you so much for your time. It does not go unnoticed. I do appreciate everybody who turns up here every morning and is committed to studying price action the way we do. So again, thank you very much for your time, you guys, and I will see you bright and early on